Hello friends, this is Raj Sastri from Raj Option Trading. Today is May 24th, 2022. Hope you're all doing well. Market is very volatile, so we got to go after most beaten down and profitable stocks so we can stay in the market and make money. So with that, let's look at stocks like Synopsys, which is profitable and beaten down at this time. So let's take a look and buy some great stocks. So let's jump in here. So we'll start with a quick market update. Look at most active ETFs. This is where I get the idea on which stock to invest in by looking at the big picture. And then let's look at most beaten down profitable stocks. And finally, let's conclude with few stocks we can buy at this time. Alright, so look from a market perspective, the fear and greed index is pointing to extreme fear. We are at one of the lowest points right now, where we are at 13. I can see us going down to maybe up to fear zone as we go forward. Lot of negative news in the market, and market does not know where to go. Yesterday it went up big time, today it came down. So market is really coming up and down without too much decision making power because of macroeconomic factors like Russia, Ukraine, and higher inflation rates and supply chain shortage and so on and so forth. So with that, let's jump in and look at market update. Look from a market update perspective, we got INTU stock rises because they have a good estimate here and also improved the outlook. INTU is one of the greatest stocks you could buy. Even up here it's down, so you could buy the great stocks like INTU here. And you got on the negative side, you got ANF, Abercrombie. Stock came down big time here, and it's the biggest one-day decline ever for this stock here. And then you got Tesla. Tesla is coming down off late here. Looks like they got a target cut here. So at this time you got to be careful about Tesla. It's a wild card. It can go up or down, but it's better to be careful because it's a little bit high multiple stock here. And then you got Snap. Snap came down tumbling here after they warned the investors about potential down in the revenue. So we got to be careful with all these social media stocks. But some stocks like Snap could be okay to slowly do some bottom fishing if you're a long-term buyer. All right, look from a market perspective, market came down big time. Look, we got market which came down from a Dow Jones Industrial Average perspective, finally managed to reverse and go higher. That's a good sign here. On the other hand, Nasdaq looks still down big time here, down 270 here, 2.35%. That must be hurting here. It's big time down, as you can see here. And even S&P 500 also came down slightly. It was down much higher, much bigger earlier. And from a futures market perspective, futures are showing some gain here, but we can depend on it. This can change overnight. It's a slight increase, as you can see here, in Dow Jones Industrial Average and S&P 500 and so on and so forth. This can change. All right, now let's look at the futures market here. Look from a futures market perspective, at least on the Dow Jones Industrial Average, we got some positive news here. At least it's trying to go higher in past 3 days. And S&P 500 is trying to decide where to go here. At least some positive tilt here, so that could be a good one here. Nasdaq is really struggling, as you can see here. Not too much luck for Nasdaq. Some slight increase, then comes back down again. Same story with Russell. Russell is also trying to wonder where to go from here. And look, oil is slightly higher, as you can see here. And we got interest rates coming down slightly. That's helping stock market slightly. Gold is a good buy even up here. It's a nice safe haven, as many of you know. All right, now let's look at most active ETFs. By looking at most active ETFs, you get an idea where to put money, and you could also buy some great ETFs. When there is so much uncertainty in the market, I typically end up buying some great ETFs at a bargain price here because with great ETFs you can buy more as they come down, because there is no single stock risk. All right, look here, we got the ETFs here, all great ETFs. Look, on a one-day basis, market is decisively negative, with the exception of few areas like safe haven consumer staples and bonds and XLU, as you can see here. And we got the industry, real estate also came down slightly higher, and we got gold, which is safe haven, also came higher. So, and we got Dow Jones Industrial Average finally managed to go slightly higher, but otherwise look decisively down day here in the market, with the exception of few areas. And look, as you look through here, S&P 500 is now in the correction territory, down 17% from 52-week high. Look at that IV percentile. I love high IV. Right now, IV percentile is very high in both S&P 500 and QQQ. You could make some great money by selling very put options much below current ETF price here. That's one of my favorite hobbies of late here. Take advantage of high volatility. When the volatility is high, sell some put options way underneath by using your existing borrowing power, and go from there. It's free money on the table, but you got to be careful to do it only on down days, not on the up days, and do it very slowly, not too much quantity. All right, so as you look through here, we got few areas that you can look at the RSI here. When the RSI down, you could buy such names here. Look, SPY is good here. QQQ is completely beaten down the low RSI. You could buy these ETFs. Look at the performance here. They've done great in the past, and they will continue to do well as you go forward. All right, look, we got SMH, one of my favorite sector here, down big time. You could buy some SMH here. It's a great one here. Look at the performance in 5 years and 10 years. It will do well as you go forward also. All right, now let's jump in here and look at most beaten down profitable stocks. Look, we are looking at stocks with the price volume more than 1 million shares, sales growth more than 10%. These companies are growing their top line revenue. That's always good. Net profit margin is more than 10%. That tells you these are not money losers. These are profitable companies. In this market, you gotta go after these profitable companies and buy them at the bargain price. And look, these are free cash flow positive companies. These companies are making money, not money losers. And also from an analyst expectation perspective, next year earnings per share as well as revenue growth is positive. So these are really good ones with the good estimates for next year. All right, let's jump in here. Look, from a stock perspective, I sorted these stocks by market cap. Stock at the top, Apple is the highest market cap. As you can see here, about $2.2 trillion, and it's in a descending order. And as you look through here, look, we got 5-year sales growth here, all more than 10%. These companies are coining money as we speak. And look at the net margin here, solid net margin, more than 10%. These companies are making money. You could buy these companies taking advantage of this downturn here. No need to worry. These are profitable companies. And finally, look at the cash as well as free cash flow. The free cash flow is more than $500 million. These companies churn money and they make money. Positive free cash flow as well as nice cash on the balance sheet, as you can see here. And more importantly, from a next year projection perspective, both EPS growth, which is earnings per share growth, as well as revenue growth is positive. That tells you these companies have got some positive outlook going forward. Finally, overall score is more than 60. That tells you these companies are great. They got nice overall score, which indicates stocks are good from a profitability, financials, and valuation perspective. That's why they get a high grade here. All right, so finally, as you look through here, We got all great companies. Keep a watch on 1 year and 5 year performance here. There are a lot of great stocks with nice 5 year performance that tells you these companies have done well in the past and they can do well in the futures by looking at next year EPS growth as well as revenue growth, which is nice and positive. All right, so we got many great stocks here. What I will do now is I will do a quick build here so you can look at a few more details. All right, now we did a quick build. We got here Altman Z-score, which is the industry standard for financial strength. Piotrowski F-score that tells you how is the balance sheet, how is the accounts, are the accounts doing well consistently over past few years. So I love when Piotrowski F-score is nice and high, about 6 or 7 or 8. Look, we got top 4 companies. Google is repeated twice, as you can see here. They all have got nice Piotrowski F-score that tells you these companies are solid from a book perspective, accounts are improving. And also look from a Morningstar grade perspective, all these companies get nice grade here. So for these stocks here, Apple, Microsoft, Google, don't worry, keep buying, double down, no big deal here. Microsoft has got a little bit higher price to sales ratio here, but I think it's a great stock. And then you got Tesla. Tesla has been coming down off late. Tesla has got a little bit higher price to sales ratio. That's one of the reasons it's coming down big time here. So as it moderates, you could start buying some Tesla, let it come down slightly. And then got few more here. Meta is a great buy at this time. Facebook or Meta, it came down in sympathy to Snap here. I think it's a great buy at these levels here. We could buy this great stock here. And we got few more. I love both MA, which is MasterCard, and Broadcom. Both are great stocks here. Broadcom is in talks to buy VMware. I think it's a good one. You could buy both these names here. Look, they got nice overall score here. And the list goes on here. Keep a watch on Morningstar rating here. All nice and high Morningstar ratings here. Couple of them have got a little bit negative or lower financials here. Look, Tesla has got profitability F score here that tells you not great from a profitability perspective. And we got one more right here, the Keurig company here. Keurig also has got a negative growth here. But otherwise, all these companies have got nice performance. I would be buyer of these companies. And if you're a put option seller or a premium seller, keep a watch on both RSI here and IV percentile. When the IV percentile is high, like Apple here, and RSI is low, you could sell some put options way below the current stock price and make some good money. That's for the option sellers, especially the put option sellers. And by looking at these RSI and IV percentile, if you're a call option spreader, you could buy a back ratio call spread, or you could even buy a call spread, so that way you can make money also. I love a spreading strategy when the IV percentile is high and RSI is low. And we got a few more names here. You could do the same thing in these names also here. You could buy a call spread, or you could even buy call back ratio spread and make some money that way also. And keep watch here when there is a high RSI. For example, you got few companies with a higher RSI like Bristol Myers and Linde. These stocks, keep a watch on them as they come down or as they stabilize here. You could buy some put option here or a put spread and make some money that way also. So these have got high RSI. That's when you kind of wait for them to stabilize, hit the resistance level, and then you could buy some put options and make some money that way. All right, now let's jump in here. There are a few companies I really like. We got Fortinet here. Fortinet has got 13 as the price to sales ratio. That's a little bit high, but stock is stabilizing, as you can see here. It's a great buy at these levels here. And I love both Edward Life Sciences as well as EW Edwards. Both are great ones you could buy here, and Pfizer also great one. And we got ISRG, one of my favorite, and BX Blackstone, a great one also here. You could buy these names, take advantage. these stocks will do well. All right, now we got few more here. Look, one of my favorite stock here, Synopsys. So you could buy this great company Synopsys here. Look, stock is stabilizing as we speak. Nice and high overall score here. And look at the nice net margin here. You could buy great stocks like this one here. And we got few more, Cadence Design, Autodesk, both are my favorites here. You could buy them also here. All right, now let's do a quick build here, so you can look at industry standard here, and we'll go from there. Look, we got here Altman Z score and Piotrowski F score and growth and profitability, and financials from Morningstar here. Look, nice score here. I love Synopsys here. You could buy this great company here. Look, low RSI. It's 53, middle of the road, not too low here, but you could still buy here. And we got a few more names here. Keep a watch on 5-year performance. Some of these stocks have got great 5-year performance, and right now they're beaten down. Look, we got one of my favorite here, Cadence Design. You could buy this great company also here and go from there. So list goes on here. Take a look at this list here. All are net margin positive companies, and they're growing their top line revenue nicely. All right, so let's quickly go through the conclusion here. Before I go through the conclusion, let me take you to FinViz platform. Look, we got few names here. Look, Apple has been coming down off late. Look, stock price has been dropping. Look here, the way it's dropping. Nice and good drop here. At this time, as you can see here, Apple has got a little bit lower up PE ratio, and PS ratio is also very low here. I say, it's a slowly good time to buy some Apple slowly here. Apple stock will do well. Look, from an RSI perspective, it's trying to stabilize here and go higher slowly here. I think Apple is a good one to slowly start buying up here. And then you got here Microsoft. Satya Nadella is the CEO here. Look, stock has been clobbered and now it's trying to go higher. Microsoft is also a great one here. Look, from a PE ratio perspective, it's not expensive here. From a PS ratio perspective, a little high valuation, but I think Microsoft has got great cloud business and Office is minting money, and they're competing effectively with the Zoom on the meeting side of the house. It's a great one to buy here. And I got a few more. Google is also one of my favorite here. Look, Google came down here. Some bad news in Google. Looks like Google Chrome is more vulnerable to phishing attacks. I think it's still a good one to buy here. They make good amount of money. I think it's a good one. Today it came down because of Snap. All these social media related companies came down big time. And we got a few more here. We got Tesla. Tesla is pretty much, as you can see here, like a free fall. As you can see here, at this time I need to see some stability before I jump in here. Price to sales perspective, Tesla is a little bit expensive here. And look, from a profit margin perspective, I think it's the profit margin is not great. So that's why you got to be careful with Tesla as I bring this up here. Look, companies, sales is doing well. As you can see here, sales is good. But as you look through the profit margin here, net profit margin is 13%. It's not great. It's not like software, but it's a little bit lower. That's one of the reasons you got to watch out carefully on Tesla here. Looks like they got an upgrade recently with from sell to hold, which is good, but I want to see this company going higher slightly. Right now it looks like it's a pretty much free fall, as you can see here. So I need to see some stabilization before I jump in here. All right, now we got a few more names here. We got Facebook or Meta. At these levels, I'm a buyer of Meta here. Look, Meta came down big time here. Now it's today it came down because of Snap. I think at these levels, Meta is a good one here. And the list goes on here. MasterCard is one of my favorite. You could buy MasterCard up here. I think you will do well. It's trying to go up, as you can see here. It's a great one to buy here. All right, so with that, let's jump back here and do a quick conclusion. From a conclusion perspective, when there is a market-wide sell-off like we are having right now, you could buy some great ETFs like QQQ, SPY, SMH, which is semiconductors, XLV, which is healthcare, and there's no single stock risk. You can accumulate at this great time and dollar cost average. And also I love to buy great stocks here. Don't buy too much, buy maybe 3, 4, 5, keep accumulating. Looks like market is deciding where to go. It's not quite there yet. That's why you can buy these great stocks in small quantities on the down days like today and last week. Buy stocks like Apple, Microsoft, Google, MasterCard, Adobe, so on and so forth that we have here. Don't need to worry about the market. Market will take care. In no time it will reverse and start going higher as it gets a little more green light. That's why you got to buy these great stocks here and accumulate them slowly, and don't worry too much about the market. Market will start going higher once there is some good news in the macro area, either Russia-Ukraine war or China lockdowns softens. There are a lot of things that can go right at this time. I think it's good to buy these great stocks and go from there. All right, so thank you very much. Happy investing and trading. Please subscribe.